A HELOC can be one of the most powerful financial tools available to homeowners. Used right, it can help you wipe out debt faster, increase your cash flow, borrow again, pay it back. It's like a reusable credit line. And most lenders let you make interest-only payments during this period. So if you borrow $30,000 at 9% interest, you're only paying interest on that $30,000. You're not forced to pay the whole thing back right away. Now, after that drop period ends, we move into the repayment period. That's when things shift. You can't borrow anymore, and now you're paying both principal and interest over the next 10 to 20 years. And here's the thing to remember. Most HELOCs come with a variable interest rate. That means your rate and your monthly payment can go up or down depending on what the Federal Reserve does. So if it's 8% today, it could be 10% next year, or 6% if things cool off. That's why you've got to treat your HELOC like a tool, not a toy. Timing matters, strategy matters, and if you don't know how to use it right, that flexible payment can suddenly become a financial punch in the gut. Why do people use HELOCs? So now you know how a HELOC works, but let's be honest, you're probably still wondering, why would I even bother getting one? Fair. Let's break that down. One of the smartest reasons to get a HELOC is this. It gives you access to money only when you need it, without forcing you to drain your savings or sell investments. Think about it. Most people keep cash in an emergency fund, earning almost nothing, just in case something goes wrong. But with a HELOC, that backup money is still there when you need it, without sitting around collecting dust when you don't. That's why people use HELOCs for things like home renovations that actually increase your property's value, paying off credit cards or personal loans with way higher interest, covering big expenses like college or medical bills, or funding a short-term investment or maybe a business opportunity. And here's the best part. With the Shred method, we show you how to use a HELOC to crush debt faster, to free up monthly cash flow, and to build real wealth in short order without changing your income or your expenses. Let's be real. Just because something can be powerful doesn't mean it's always the right move. A HELOC isn't magic, it's a tool. And like any tool, if you use it the wrong way, you could do some damage. So before you run out and apply for one, let's talk about the real pros and the very real cons that you need to know about. Let's start with the pros. Pro number one is flexibility. You can borrow what you need when you need it, and only pay interest on the amount that you actually use. That's a huge advantage over things like personal loans or full cash out refinances. Pro number two is lower interest rates. If you're juggling high interest debt, say 20% on a credit card, a HELOC could let you refinance that into something closer to 8 to 10%, and you'll end up saving money instantly. Pro number three, you don't touch your mortgage. If you locked in a great rate a few years ago, you don't have to refinance it and lose that rate. The HELOC sits on top of your mortgage, so you keep that low payment intact. Pro number four, emergency access. It's like having a financial fire extinguisher on standby. You don't want to use it, but when you need it, you'll be glad it's there. Pro number five, the interest might be tax deductible. And finally, if you use the money to improve your home, think renovations or repairs, the interest you pay on the HELOC could be tax deductible. That's extra savings come tax season. Just be sure to check with your CPA or tax pro to make sure your situation qualifies. Now let's talk about the cons, because this is where people get into trouble. Con number one, variable interest rates. Most HELOCs aren't fixed, so your payment can go up if interest rates rise, and they do rise. That makes long-term borrowing risky. Con number two, it's tied to your house. This is a big one. If you borrow money from a HELOC and you can't pay it back, the bank can foreclose on your home. It's not like defaulting on a credit card, it's your roof on the line. Con number three, the temptation to overspend. Some people see a $100,000 HELOC and start thinking about kitchen upgrades, vacations, a new car, and boom, they've dug a hole. This is not what this tool is for. So the takeaway here is simple. If you use a HELOC with a plan, like the Shred method, it can accelerate your goals. But if you treat it like free money, it can quickly become a very, very expensive mistake. Qualification criteria and application process. So if you're thinking, okay, this might actually make sense for me, you're not alone. A HELOC can be a seriously smart move if you've got a plan for it. But before you run to the bank and apply, there are a few things you need to know, because not everyone qualifies and not all HELOCs are created equal. Let me walk you through what lenders are looking for, how to qualify, and how the application process actually works. It's way simpler than a mortgage, but there are some key things to watch out for. First, let's talk about what most lenders are looking for. Number one is a solid credit score. Generally, you'll need a credit score of at least 620, but 700 or above will get you the best rates. Lenders are looking for sufficient income. They want to see that you have a steady income and enough room in your budget to make the payments even if rates go up. They will likely qualify you based on the total amount that they're allowing you in limit. So be careful about how much you ask for relative to how much other debt you have. Number three, equity in your home. This one's big. You typically need to have at least 15 to 20% equity in your home to qualify. That means if your home is worth $500,000 and you owe $400,000 or less, you're in the zone. And here's the fun part. Some lenders will offer credit lines up to 85, 90, or even 95% of your home's value, sometimes called the LTV, loan to value. But the higher you go, the more conservative the lender may be with rates or terms. What's the application process like? So you've got a decent credit score, you got steady income, and some equity built up in your home. You're probably in a good spot to qualify. But just knowing you qualify isn't enough. Now the question becomes, how do you actually get one? What paperwork do you need? Who do you need to talk to? Don't worry, it's not as intimidating as getting a full mortgage. In fact, let me walk you through exactly what to expect step by step. Step number one, pick 2 to 3 local banks or credit unions. Don't just go with the first offer because rates and terms could vary a lot. Smaller local lenders, like credit unions, often give better deals than big national banks. Step number 2, submit your application. You'll provide proof of income, you'll provide your ID, some property details, and you'll give permission for a credit check. They will pull your credit. Step number 3 is property valuation. The bank may do a full appraisal, they might do a drive-by appraisal, or even just a digital estimate depending on the lender. And yes, they do this to protect themselves, but it's also your chance to get the highest valuation and the best possible credit line for your needs. Step 4, review the terms. Now that everything is done, you'll want to ask questions like, what's the interest rate margin? Is there an annual fee? Can I lock in part of the balance at a fixed rate later? Are there any early termination fees? Do I have limits on how much I can draw from the line of credit at any given point in time? Step number 5, close and access your funds. Once you're approved, you'll sign a few documents and boom, you get access to your line of credit, usually through online banking or a special checkbook. Alternatives to HELOCs. All right, so maybe you're thinking, a HELOC sounds good, but is it my only option? The answer is not at all. Let's walk through a few common alternatives to a HELOC because depending on your situation, one of these might make more sense. And the first one here is a home equity loan. Now this one gets confused with a HELOC all the time, but here's the difference. A home equity loan gives you a lump sum of money up front, usually at a very fixed interest rate with fixed monthly payments over 5 or 10 or 15 years. It's basically like taking out a second mortgage. In lender speak, sometimes this is called a closed-end loan. And what we want for the SHRED method is an open-end loan, a home equity line of credit, not a home equity loan. Home equity loans are good for big one-time expenses where you want predictability, like a full home remodel or paying off a big chunk of debt where you want to make sure that the payments are exactly the same. What it's not great for are ongoing expenses or if you want the flexibility to borrow as you go. As I mentioned, the SHRED method focuses on using a home equity line of credit. And our algorithm and the software that drives the program will make sure that you don't go very long into the line of credit, but you're optimizing the cash flow month after month after month. The second one I want to talk to you about is a cash out refinance. With a cash out refinance, you replace your current mortgage with a brand new, bigger mortgage, and the difference between what you owe and what you borrow comes to you in cash. Now this one's good for you if your current mortgage rate is high and today's rates are lower. This could save you money and give you access to cash at the same time, but it's not great if your existing mortgage rate is super low, say under 4%. You could be giving that up for a higher rate, so tread carefully. And finally, you have personal loans or lines of credit. If you don't have a ton of equity in your home or don't want to use your house as collateral, you might consider a personal loan or an unsecured personal line of credit. This is good for short-term needs under 50 grand, especially if you have excellent credit. The personal line of credit is another alternative for the shred method, but we will tell you once on the coaching calls what would be your best bet. Here's what these are not great for. Personal lines of credit are not great for large expenses because interest rates can be much higher than home equity options, and the terms are usually shorter. Conclusion. Now that we've gone through everything, here's the bottom line. A HELOC gives you flexibility and control, but it's not the only game in town. Depending on your credit, your goals, your risk tolerance, there may be other tools worth exploring. And one of the things we recommend at the Shred Method is jumping on a call with one of our coaches. Within 20 minutes, we'll give you in black and white, here's what you can go look for, and we'll also direct you to some of the lenders that are nearby. The key here is knowing your options and choosing the one that works best for your strategy. So before you jump in, take a breath. Let us run the numbers for you, and definitely talk to a qualified advisor who understands your situation. These aren't one size fits all. And so the right move for your neighbor or for someone who told you about the Shred Method might not be the perfect right move for you. But in talking to us, we'll guide you in the right direction. Now, if you're someone who wants to pay off your debt faster, if you want to build wealth and actually use your income and your home equity to your advantage, that is exactly what we do inside the Shred Method. We teach homeowners how to plug a HELOC into our proprietary cash flow system to eliminate debt quickly, to increase your monthly cash flow, and to unlock real financial freedom in months, not years or decades, all without needing to earn more or to work harder. So if you want to see how the Shred Method could work for you, go take the free assessment at theshredmethod.com and click on the button that says Savings Analysis. You'll be shocked at how much interest you're overpaying and how fast you could be out of debt when you start doing things differently. Thanks for watching. If this video helped, drop a like, subscribe, a thumbs up, and let me know your thoughts in the comments. And if you've used a HELOC before, how did it go? We've got more videos coming your way to help you shred your debt and take control of your money faster than you ever thought possible. See you on the other side.